Over 90% of people who venture into trading end up quitting in their first 2 years. And the reason why these traders quit is because they don't have an understanding of the simple step you can use to know the overall market direction. This is something that is not talked about by mentors, by trading education companies. But in this video, if you stay tuned to the very end, you are going to learn tons of value from this video to understand one key thing to focus on to know the overall market direction. Now, take for example Euro US dollar. In the previous weeks, Euro US dollar was consistently going to the downside. A lot of traders were taking sells, some were making money, some ended up getting wiped out, and the market dropping as well. But one thing that most of these traders don't understand is that the overall market direction on Euro US dollar is to the upside, regardless of the impulse the price is using to come to the downside. Your focus is to look for potential entries and continuation to the upside. And the reason for that is because if you go to the biggest time frame, being the 12-month time frame, you can basically see that right here, price is consistently creating higher lows and higher higher lows and higher highs. And then right here, potential higher low. And I still won't be surprised to see a potential higher high in the future. This is going to take years to happen. As you can see, every single candle right here is a 12-month candle. But having this understanding, it helps you to know whether you're going to be a buyer or a seller. Despite the fact that you're seeing a huge displacement to the downside, you stay focused to the overall market direction, which is to the upside. And if we use our Fibonacci from this overall low right here to this overall high right here, you can see that this key level is our extreme discount. And look what's resting at the extreme discount: inefficiency, which means price coming down into this position. We're looking for an opportunity to buy. And after that, no matter whatever we see, no matter the impulse the price is using to come to the downside, our focus is to look for areas of liquidity, areas of discount to buy. Now, it doesn't mean that once price comes to an area of discount, we just jump into a buy. We can wait for confirmation. In this video, I'm going to also share with you an example of the confirmations we can look out for. For example, you can see we have this high, we have the low on the weekly. If you use the Fibonacci from the high to the low, this key level is our area of extreme discounts. And look how nicely price came to that area of extreme discounts and rejected of that position. Impulsively rejecting of that position. I won't be surprised to see a potential continuation of the upside on Euro US dollar to even rally above these highs, because every single high you see right here is liquidity, low resistance liquidity. This high is resting right here, low resistance liquidity. I'm not going to be surprised to see the market rally above that high to run the low resistance liquidity. When I say low resistance liquidity, what does it mean? It simply means areas that price can easily rally above because there hasn't been a run on liquidity above that high. An area of high resistance liquidity is an area that price has already taken liquidity of that key level, so it's going to be difficult for price to run that liquidity. For example, right here we have an area of high resistance liquidity. You can see that right here. And the reason why this is an area of high resistance liquidity is because price has already come to the downside. You can see right here as well, it's an area of high resistance liquidity because the liquidity resting right here has already been mitigated. Price has already come to the downside to take that liquidity. So I really wouldn't be expecting price to still come down to run that liquidity again, even though that is still possible to happen, but it is a high resistance liquidity. So we are not anticipating for price to rally above or below a high resistance liquidity, but rather we're looking for those low resistance liquidity zones that price can easily smash through those key level. An example of them is this one. There hasn't been any run on liquidity above this high. And look right here, you can see how we came into that extreme discount. The next thing we'd like to see from that key level would be a potential 30-minute shift in market structure and we look for a buy setup. And right here, if we use the buy replay and go to 30 minutes time frame, you can see very nicely how price created a high, created a low. We saw a break of structure right here. After that break of structure, this was the last down close candle before an expansion to break structure. Price came back into it, mitigated it. This key level, this is an area of accumulation. If you want to buy, this would be a beautiful area to place an entry position, stop loss using the overall low resting right here, and then your take profit position. You can aim for a 1:5 or look for the low hanging fruit area, look for an inefficiency or a previous high within the range. For example, you can see inefficiency here, inefficiency here. You can use that as a take profit position. And also we have this small inefficiency resting right here as well. You can also use that as your take profit position. You can see that right there. You can use that as a take profit position, and look right there. That's a 1:5 risk to reward ratio. And look how nicely price smashed into the take profit position, delivering a 5% move if you're risking 1% on this trade. So this is how to focus on the overall trend. And if you're someone you're struggling with finding consistency in trading, I bet you if you watch this video, go back and practice understanding the bigger time frame, 12-month time frame perspective, 6-month time frame perspective, and try to trade with that overall trend is going to be a game changing in your trading journey. If you found this video insightful, give it a thumbs up, follow for more. If you have any questions, feel free to drop it on the comment section. I appreciate you, and I'll talk to you in the next video.